Ladies and gentlemen, good day and welcome to the UFO Moviez India Limited Q4 and FY24 earnings conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note this conference is being recorded. I would now like to hand the conference over to Tanuj from Ventura Securities Limited. Thank you and over to you, Tanuj.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities, I welcome you all to UFO Moviez India Limited Q4 and FY24 earnings conference call. The company is represented by Mr. Rajesh Mishra, Executive Director and Group CEO, along with Mr. Ashish Malushte, Chief Financial Officer of the company. I would now like to hand over the call to Mr. Mishra for opening remarks, post which we can start the Q&A session. Thank you and over to you, sir.
Thank you, Anuj. Greetings everyone and thank you all for joining our Q4 and FY24 earnings call. The fourth quarter of FY24 started on a decent note with movies like Hanuman featuring Teja Saja, Captain Miller featuring Dhanush and Fighter featuring Hrithik Roshan in January. Following these movies such as Teri Baaton Mein Aisa Uljha Jiya featuring Shahid Kapoor, Article 370 featuring Yami Gautam, Shaitan featuring Ajay Devgan and R. Madhavan and Crew featuring Kareena Kapoor and Tabu were released in February and March, contributing to a steady quarter along with some sleeper hits also like Madgaon Express, Manjumal Boys, etc. However, there were some movies like Merry Christmas, Main Aata Loon Crack and Yodha which failed to make a mark at the box office. So overall, the fourth quarter had a mixed bag of content and we closed the year with a blend of successes and underperformances. The year FY24 showcased a diverse range of films releasing across languages and genres, from big budget spectacle films to regional gems and some sleeper hits, demonstrating the industry's resilience in meeting changing consumer demands. Despite significant content volatility, the overall business saw improvement, marking the first profitable financial year since FY20. Strategic cost optimization along with steady theatrical revenue and a 62% year-over-year growth in advertising revenue as compared to the previous financial year has helped strengthen the financial position of the company. Corporate advertisements grew by 40% as compared to the last financial year. Government advertisement revenue also marked a growth of 85% on year-on-year basis due to traction from state governments and PSUs. Caravan's advertisement revenue sustained the momentum and marked the highest advertising revenue since FY19. Along with the growth in advertisement revenue, screen network also expanded significantly, surpassing 3,800 screens for the first time in over 5 years. The advertisement screen network was at 3,859 screens as compared to 3,348 screens in FY23 and 3,792 screens in FY20, with a notable boost in both prime screens by 419 and popular screens by 92 screens as compared to FY23. Now moving to the headline numbers for the quarter and full year ended March 31st, 2024. Consolidated revenue stood at 1,192 million rupees compared to 884 million rupees in Q4 FY23. EBITDA after considering one-time provision in Q4 FY24 was 152 million rupees compared to 115 million rupees in Q4 FY23. The loss at PAT level was 12 million in FY23 compared to a profit of 60 million in Q4 FY24. For the full year FY24, the consolidated revenue stood at 4,101 million rupees compared to rupees 3,978 million in FY23. EBITDA improved to 676 million compared to 339 million in FY23. The EBITDA margin improved by 796 basis points from 8.5% in FY23 to 16.5% in FY24. PAT stood at 164 million rupees compared to a PAT loss of 132 million in FY23. Regarding the consolidated funds position, the balance at the end of the quarter stood at rupees 1098 million. As of March 31, 2024, the company continues to be net cash positive after considering outstanding debt. Looking ahead with the upcoming movie lineup, including releases like Mr. and Mrs. Mahi, Chandu Champion, Kalki, 2898 AD, Despicable Me, Safira, Veda, Sabarmati Report, Pushpa 2, Stree 2, Bhool Bhulaiya 3, Sitara Zameen Par, and many others. We are seeing a good slate and we are optimistic to see a continued positive momentum. I would like to take this opportunity to thank all our stakeholders for their continued trust in the company. With that, I open the floor to take your questions. My colleague, Mr. Ashish Maliste, CFO, and I will be happy to take your questions. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Our first question comes from the line of Ankit Kanobia from Smart Sync Services. Please go ahead.
Hello. Thank you for taking my question and congratulations for good set of numbers. So my first question is related to the industry as a whole. So if we look at the results of say PVR, Inox and the commentary there, and as we believe this is an industry where the quality of movies which get released that decides the performance of our business to a great extent. And general consensus is that Q4 didn't have too many good movies being released, and even the Hollywood contribution was much lesser in Q4. So given that kind of a backdrop, I think we have done a commendable job. What worked really for us to have this kind of revenue growth in Q4 year on year? If you can give some more color on that, that would be very helpful. That is my first question.
Yes. So should we first take this question?
Yes, sir.
Hello. Yeah. So good question, and happy you have brought this up for discussion. The only 2 points I'll give here. One is that you're absolutely right that we are integral part of this industry and we provide one of the critical sets of services for the industry, and therefore our fortune should and must be linked with the fortune of the industry, and so is the case. Particularly in Q4, what has happened is we have 2 sets of revenue streams. One which comes from the services that we render to the industry, and second is from the advertisement revenue. This is broadly the model that we have. As regards the service revenue, you must have noticed that being in the nature of service revenue, it is in a way nothing to do with the success or failure of the films. In other words, more the number of films, better is our revenue there. The other side to look at it is when there is an exceptionally good quarter on the box office, you won't see this revenue stream going up because we are acting as a service provider. So here, especially in content delivery services, if you see our numbers for Q4, we have actually generated 4 crores of higher revenue versus last year's quarter, Q4. And that's because we had close to 500 movies which got released across the country, including various genres and languages, and which is a phenomenal number. On an annualized basis, it is close to 2,000, and pre-COVID this used to be around 1,800. So sheer number of movies getting released help us to generate this service revenue, which sits into the my revenue line item, content delivery charges, and that has almost 90% plus PBT margin or EBITDA margin for us. So one of the reasons why we in a way could do better performance, though the industry's box office didn't do well, is because more number of movies were there the industry came back in a way, because in the previous year we didn't have all the theaters who were operating fully. This year probably that number has gone up, and that has helped us to better our service revenue. When you come to the advertisement revenue, over there also we have done little better than our peers and seniors. But over here, the ad revenue, if you compare with Q3, even we had a little disappointment, because we were hoping that if the content is better, we will be able to do much better on ad revenue front as well. But unfortunately, the ad revenue in our case, which was close to 38 crores in Q3, has gone down to close to 31 crores. So yes, you're right, on a year-on-year basis, this is still a 24% growth over 25 crores. But QOQ basis, advertisement revenue, if you see, there is a little disappointment, though we have done better than others. And probably that sums up the reason why we have done better. And with this information about ad revenue, all I would say is we could have done much better had the content performed and the industry done well on box office.
Yeah, thank you so much, sir. That was very, very, very helpful. Just a clarification on that. If I got it correct, if more numbers of movies are getting produced, irrespective of whether it is a hit or a flop, our content delivery charges will see a boost, right?
Yes, that is correct.
And if there are more number of blockbuster movies, we will probably see a jump in ad revenues. Is that understanding correct?
Absolutely correct. Only one small caveat: when you have a blockbuster which runs for multiple weeks, the billing, the CDC revenue rate card is such that in subsequent week we generate lesser revenue. Therefore, when you have a blockbuster, we have a phenomenally better ad revenue. But the content service revenue slightly takes a dip in the subsequent weeks.
Got it.
On a net basis, a blockbuster is always helpful when you see both put together in our case.
Got it. So my next question is related to our cash flow generation. So last quarter, our cash flow generation has also gone up phenomenally. So I think 20 crores of that is attributable to the tax adjustment. But even if we take that aside, the cash flow generation has been much better compared to previous quarters. So would you again, what would you attribute that to? What has led to that high cash flow generation year-on-year difference?
Yeah. So again, 2 points here. One, let me further clarify the point that you talked about tax adjustment, because you're right that now that you have made this statement, good that you made it, because I can clarify on the call. It's not a tax adjustment. In fact, if you see my balance sheet last year, I had close to 48 crores of the taxes that were deducted and that were due for refund. That happened during the COVID period, because the TDSs continued to happen and we had accumulated losses, and therefore this was remaining stuck in a way with the IT department, and the amount was huge, 48 crores. Of this 48 crores, in last quarter we have realized 30 crores. Okay. So it's hard cash that is received. It's not a tax adjustment. So that's just one clarification that I wanted to give.
Yeah, sir. I meant that only. What I basically meant was that it has nothing to do with the operational cash flow generation.
Yeah, to that extent, you're absolutely right. So one is this, that has helped us in getting the cash in. And the second thing that has happened is our working capital is such that more money gets stuck in the advertisement revenue, because there the cycle is about 5 months. But the other revenues, predominantly our service fees, is where we don't. In fact, sometimes it's a negative working capital, because most of that money we receive before the release of the movie. Now, what happens is, over a period of last 5-6 quarters, when our business is stabilizing post-COVID, we have now reached a stage where we don't really, on an incremental basis, not higher amount of working capital is getting stuck. So yes, certainly there is an efficiency on a business front. And last year there was one more element that we controlled, was the capex, because broadly my business is we make money, the money gets, it's true for all the businesses, we make money, that money gets stuck in working capital. This in our case is now stabilized. Therefore, the generation for business is higher. But the utilization of this predominantly in our case is for capex. And the capex last year was deliberately kept down because we wanted to see how whole of the industry is performing. And I'm happy to say that the industry, when I say the exhibition industry, not just the premium multiplex screens such as PVR Inox, even the smaller segments and the smaller centers are seeing more number of screens coming up. And going forward, we'll have to put more capex, but last year we controlled the capex and that resulted in a better cash generation.
Got it, sir. So, another question is related to Caravan. So Caravan we started long back, but I think during COVID everything was shut and then we have again started it, and Q4 saw a big jump in Caravan. How do you see that going forward? Do you think it will in the coming years it will become it will contribute in a meaningful way to our total revenues?
Yeah. So, as we had briefed on our earlier calls, we were awaiting the empanelment of Caravan with the CBC, that is Central of Bureau Communications, and this empanelment came through in the last year, and this has helped us to garner business under this from the governments, and there has been advertising from central and governments, and we are looking at more positive continued growth in this area from the government and the corporate advertising front also on this thing. So Caravan business we are positive about.
Got it. And sir, generally when we cater to the single screen theatres of the country, and a general perception in everyone's mind, I may be completely wrong, but it's just a perception which we talk about, is that more and more new multiplexes like PVRs and all will get opened, and we are seeing a dropping of single screen theatres. Under that industry backdrop, how do we see a long-term trend in our business model? Don't we see that as a long-term risk when we cater to them?
Typically the industry 20-25 years back was predominantly all single screens only, and then came the multiplexes. What we have seen over the years is the cinema number of screens has remained more or less at a steady state. That means whatever screens are closing down, equivalent number of screens are also opening up. The good part that happens over here is, say if certain screens close down, some will not open up, they will shut down permanently. But lot of the single screens also get converted into multiplexes. So one single screen closing down could translate into 2 or 3 screens in a multiplex opening up. So generally, if we see the number of multiplex screens in our network keeps rising on this account, and single screens which are situated at good locations, especially South market is pretty much largely dominated by single screens. North we are seeing a lot of conversion into multiplexes also over there. So we will generally see single screens migrating into good quality either single screens or some of them converting into multiplexes. Either way, it will improve the product mix at our end from the perspective of quality of cinemas, from the perspective of advertising potential and all.
So on this point, let me give some data points for you. And I'm again very thankful to you that you have brought this point up for discussion, that the general perception is UFO caters to single screen. The corollary of that is single screens are going down, which means this company probably is in a sunset business. And while we at the management level don't really understand how the equity market behaves, and we are focused on our business, one of the views that we have is probably this view which the market has formed is not helping us in getting right kind of positioning. So let me clarify. In FY20 Q4, out of 3,800 screens, the single screens were 2,200 and about 1565 screens, 1565 screens. Even that time were multiplex screens. Okay, so we started in 2005. That time, 100% screens were single screen. By 2020, before we hit COVID, of the network, almost 38% screens had moved to multiplexes. However, we were still considered as a single screen company. Now let's see what the situation is post-COVID. Post-COVID, if I see in the Q4 FY24, I mean on 31st March, my screen strength has come back or little gone beyond pre-COVID, which is 3859 screens. And of these 3859, 1750 screens or 1742 screens are single screens. So single screens shrunk by almost 500. And my multiplex screens have gone up to 2117 by almost about 550. So now my proportion of single screens is in excess of 55%. So the fact, sheer number itself, that over 2000 screens under the belt of UFO's digital cinema advertising network actually makes it the largest in terms of number of multiplexes network even in the country. Now, somehow, though these data points are given out in my presentation, I'm not sure whether we have been able to really convey it with this kind of stress and emphasis. And I would really want you to take note of this, and therefore it's not really fair to assume that UFO is a single screen network. UFO is a network providing service to the entire exhibition sector. As the exhibition sector is moving towards multiplexes, so is my network. So this was one data point which I wanted to give you, and I'll be happy to discuss with you offline in case you have any discussions to be done around it.
That was really, really helpful, sir. And I think the one change we can make in the presentation is that when we mention 3859 high impact ad screen, we can probably give a breakup of that. How many are single screen and how many are, that will make it more clear for all the investors. Because in our presentation, we have never mentioned that. And very heartening to know that 50% of the mix is close to 50% is now multiplex screens. And sir, if you can give me more detail,
can I interrupt here? Yes. On my presentation, slide 11.
Okay.
When I'm giving you prime screen and popular screen category, of the prime screens 2492, 90% screens and almost 85% screens are multiplexes. So you're right to the extent I am not explicitly saying that what is multiplex. So you're right, people may not understand what do we mean by prime screens. So it's a very, very valid input, and thank you very much. Not this quarter, maybe from next quarter onwards we'll start giving it out, because it's already published. We may in fact look at republishing it, and we'll clarify that out of prime screens how many are multiplexes.
Yeah, that would be very helpful, sir. Sir, moving on, sir, hello. Yeah. Am I audible, sir? Yeah. So, sir, as you said that probably, if my understanding is correct, that as more and more multiplex screen comes into our kitty, it is helping our business. Can you give more color into it? How does it help our business when we have more multiplex screen vis-a-vis single screen?
Honestly, we didn't mean that multiplex screens alone help us. Single screen also help us, but nowadays single screens are not really made. Very few screens are made. Any addition to my network of any screens, whether single screen or multiplex, helps us a lot, because every new screen, I don't have so-called, if you see my manpower and SG&A, it's quite a huge cost, and there's no incremental cost that I have to incur to service that theatre. And therefore, any new addition is good. Multiplex helps us because my ad sales team then is in a position to better sell the whole network, which is a combination of high number of multiplexes and low single screens, to an advertiser.
Got it. So one last question, if I may. In the previous calls, we have always been maintained that the government portion of advertisement revenue has not been picking up. But if I see FY24 compared to FY23, there has been actually a decent growth in the government plus PSU advertisement revenue. So how do you see that going up in the future? Because if I look at pre-COVID period, this used to be a pretty high number, and right now it is at a very low level compared to the total advertisement revenue. If you can give some color on this, that would be very helpful.
Yeah. So your observation is right. There is an improvement that you can see in the government segment. However, I would like to tell you that when we used to say that there is no continued spend from government segment, we meant central government. The central government used to be a huge advertiser on entire digital cinema network. And in this year, when you are seeing on a full year basis, my total ad revenue has moved from 17 crores to almost 41 crores in this segment. The predominantly out of this 24 crores increase, 16 crores increase has come from government and PSU. I mean the state governments and PSU. And almost 8 crores increase has come from caravan. So central government has contributed in this 24 crores increase only to 1.5, 2 crores of contribution. So the good part of this analysis is that yes, our sales teams were able to then tap into this various state governments and try to get back the sales in this segment. And the positive side is central government is still on a lower or near zero level of spends. So if there is a change in the strategy which the central government the ministries have about allocation of their ad spends and increase in their ad spends, then entire industry, digital cinema industry can be the beneficiary, and if that happens, we stand to be one of the biggest beneficiaries because our network is one of the highest. So if that happens, then you will see a far more increase in the revenue. The positive side is whatever increase you have seen is in a way new segment that our teams have developed, which is state government.
Got it, sir. Thank you so much. That's it from my side, and I'll come back in the queue if I have more questions. And all the best for the future.
Thank you. Thank you.
Thank you, sir. Ladies and gentlemen, you are requested to restrict with 2 questions in the initial round, and you may join the queue for more questions. Our next question comes from the line of Nitin Dharmawat from Aurum Capital. Please go ahead, sir.
Yeah, thank you for the opportunity. Regarding this government revenue, let me rephrase the question. We are saying that the revenue in the last quarter from the government sector has gone up, and we can see that by almost 31%. Is this growth sustainable? And how do you see this growth in the current ongoing quarter, which is an election year? So do you see that any change that is happening from the government side spending for the cinema?
So let me again try to rephrase the answer, and you're right that it's a better way to pose the question that you have asked. Firstly, what we clarified is that we were able to tap into the new sets of advertiser in this segment, which was state governments. Now that has increased the spend too, and this year our total spend that we have got from these state governments and PSUs is 28 crores out of the total 32 crores of government spends, excluding caravan. Now, question is whether this segment is likely to grow. Answer is yes, because here still we are talking about maybe 4 or 5 states who have really started looking at this network, and I'm not saying they have gone full on spending on this network. So in terms of pure opportunity, you have many other states, and these states themselves can allocate more. This is one. Second, and most importantly, central government is still not restarted their campaigns on digital cinema networks, while we are seeing campaigns slowly happening on other networks. And honestly, we are hopeful because the efficacy of this medium was very